The Asian session just flashed a massive signal for the US Open. The KOSPI hit a record close today, but it wasn't built on fundamentals. It was driven entirely by mechanical short covering and heavy retail concentration. The index smashed right through resistance, locking in an all-time high close at 7,844.01. So why does this matter to us right now? Because this Asian market transmission directly targets U.S. semiconductor assets. Specifically, we're looking at the SOXX and SMH ETFs. Let's track the transmission path. This record close rapidly absorbed three major catalysts at once. First, the Korean government dropped an aggressive strike-blocking statement to directly protect Samsung Electronics. Second, the market priced in a massive AI data center capex supercycle report. It showed North American cloud service providers are up 80.7%. The third spark was geopolitical. A Truth Social post confirmed NVIDIA's Jensen Huang was aboard Air Force One, injecting immediate momentum. But you have to look at the capital flows here. Foreign institutions actually executed a hard valuation rotation. They net sold 1.72 trillion KRW in SK Hynix and another 1.55 trillion in Samsung Electronics. To fill that massive gap, retail and proprietary desks stepped in fast. They concentrated their buying so heavily that just 3 stocks made up 53% of the total KOSPI turnover. This setup created severe underlying weakness. The remaining 63.5% of listed stocks actually declined, totally abandoned by supporting buyers. At the exact same time, market divergence hit extremes. The foreign short-selling ratio surged intraday to a staggering 76.40%. That divergence forced a mechanical liquidation of short positions. This squeeze drove highly shorted stocks, like Hyundai Mobis, up 18.43% on pure short covering. Which brings us to the US Open execution strategy. Listen closely. We are operating under a positioning-driven short squeeze rally. Invalidation risk is highly elevated. This is a bearish trap disguised as a bullish scenario. For your target asset NASDAQ futures contract NQM26, the absolute key pivot level to watch today is 29,000 points. Here are your hold conditions. If the index holds above 29,000 and US PPI month-over-month prints at or below 0.5%, execute a half-size entry into the SOXX and SMH ETFs. If that 29,000 level is breached, take immediate defensive action, make 0 new entries, apply a 1.5% trailing stop to all your existing positions. Zooming in on the target asset SOXX, your primary tactical pivot level is strictly set at 11,717.3. The action here is binary. If that pivot holds, scale up your position size. If it breaches, lock it down. Maintain a strict no entry stance. You must understand your bearish trap conditions. Liquidate all long positions instantly if any of these 3 trigger. 1. PPI exceeds 0.5%. 2. The U.S. 10-year yield breaks above 4.55%. Or 3. The VIX closes above 20. Now for the final macro checklist for the U.S. session. The U.S. 10-year Treasury auction just cleared at 4.468%. This confirms underlying demand softness. Because of that soft clear, your safety buffer to the tactical failure threshold is dangerously thin. It's reduced down to just 8.2 basis points. Next, watch the EIA crude oil inventory. If we see a draw exceeding 3 million barrels, that will directly accelerate the arrival of our failure conditions. We also have Fed speakers Collins, Kashkari, and Logan taking the mic today. These 3 simultaneous channels will dictate the market's real-time interpretation of the next rate move. In the tech sector, Cisco's Q3 guidance is your immediate barometer. They need to beat a revenue target of $15.56 billion today to validate the ongoing AI capex narrative. Finally, monitor the Trump-Xi-Beijing summit. This event serves as a conditional catalyst for broad AI regulatory easing. Keep an eye on how this alignment interacts with the technical data. If you would like to receive news on the closing of Asian stock markets before the New York stock market opens, please subscribe.